conversation. Trust me, it will be worth it in the next 20-30 minutes. I'll be very brief but very, very detailed on what shadow clause is and what they are all about, what are the rules you should be concerned about, and how you can even go about participating. And then also to set the ball rolling too, I would like to also share my screen and walk you through some few slides. But I love to do my presentation right from my mind without necessarily using slides. But of course, it's also important that we share you pictorial view of what we are always talking about. And on that note, let me say welcome officially to our conversation tonight. I am your regular host, Jerry, that humble servant you have in Accra. It's always a pleasure, to serve you. So tonight we're going to discuss Shadow's Claw in detail. What is Shadow's Claw? Why are we bothering you so much with this conversation every week in and week out? Already we are 1 month old into this project. Why is Jerry, going on and on and on, talking about this and nothing else? It's very simple. When we talk about Shadow's Claw is actually built on three different layers, three powerful layers, guys. Three powerful layers. These layers are classified into one, the economic layer, the execution layer, and then the dark layer, or the dark layer. Now, all these three layers are strong pillars based on which this whole concept was built. And for that matter, in tonight's conversation, I would like to break each and every one of them in detail. I want you to leave this call understanding what economic model we are pursuing and why they decided to emulate that model. And then we also talk about their AI agents, and then talk about their prediction platform, which is the DAP, the DAP layer, and how it all comes together to form that unique thing you and I have been looking for. So first of all, let me start with the economic layer, the the Olympus DAO economic model. Now, I keep saying and I keep hammering this, and each time I say this, I confidently say it because I know most of you are on this call. You can relate to what I'm saying. This is a model. The Olympus DAO, first of all, is a similar project like what we have here. They came up with a certain model, and they said that, look, each time new projects come into being, like crypto projects, mostly in the crypto space, every project is treated almost like a new nation or a new country on its own. Each country have their own internal currencies they use. For instance, when you come to Ghana, for instance, we use what we call the Ghana cedi, right? If you go to Nigeria, our friends use what we call the Naira. In the crypto space, each project is treated as a country, and in most cases, they rely on their internal currencies to man the affairs of their operations. And by doing that, of course, they have their own ecosystems. One challenge they have always faced in the past has been the fact that when they launch their models and they come up with their own internal token, creating a token is not an issue. In fact, I can go on the blockchain right now, within 2 minutes, create a token. It is not a difficult thing to do. The most difficult thing to do is finding people who will provide liquidity or how to make that token tradable for somebody who is interested in buying it to buy, and then somebody who holds it to also have the ability to sell without much fluctuations in price and all that. And in doing that, these guys rely on what we call external liquidity providers. These guys are set of businessmen, crypto users like me and you, whose job is to just go out there, provide funds to these platforms, and ensure that people who wants to buy their tokens or sell their tokens are able to have that liquid flow to be able to do their business. What do they gain in returns? These guys earn the fees and extra commissions and bonuses that comes with some of these things. And some of these projects make it so lucrative. They give out a lot of other incentives to attract a lot of these guys to provide liquidity and then make the token tradable. But what has been their downfall in the past has always been one very simple thing. Most of these liquidity providers, because the nature of their work is based on incentives, when another project comes up and they seem to be offering better or more incentives, they abandon this project. Of course, it's their money. It's not their monies are not locked. Their money is in their control. They are just providing that liquidity externally to ensure that trading of your token is possible. But if they find better paying, options, they pull out these funds from this project to go and support or to provide liquidity for other more rewarding tokens. Then that leaves these tokens in hanging, in that the liquidity required to maintain the stability of the price and all that begins vanishing. And at the end of the day, you see the price of this token, crashing. I keep telling people the price at which you see a token listed is not as important as the liquidity or the money in the liquidity pool to support the trading. For instance, there is a token currently trading, let's say at $20. Then there are about 300 million pieces of that token. And then with a certain amount in circulation, the token currently is trading at $20. But if you check their liquidity pool, you realize that total money in there will just be about $200,000. So in effect, what it simply means is that when that money runs out, irrespective of how much you have in your token in your wallet, you will not be able to swap to get that money. The price falls deeply, and at the end of the day, you end up fetching what we call dust in this space. So liquidity provision is very important. So when these projects pull out these funds, these liquidity providers pull out these funds, they end up suffering from some of these things, and eventually their community begins to panic. And then you see people pulling out their funds, people, even calling them scammers. You just rug pull on us and all that, and then that crashes their programs, and all those dreams vanishes. So this group of people, the guys who came up with the Olympus DAO, said that, look, we believe that if we can find solution to rather relying on external liquidity providers, then I believe that problem will be half solved, right? So they came out about 6 years ago to launch as a community staking project, and then they back it with a community owned liquidity, what we call the protocol owned liquidity. So how did they do that? They rallied on their people, created avenue for their people to actually provide this liquidity in the form of staking. So they stake their money to ensure that their tokens are tradable, and then whatever commissions and rebates and all that comes out of those activities are rather channeled to the users who actually provide this liquidity, right? And then in doing that too, they made sure that they did away with greed, making sure that where the purse is, where the money is, nobody had access to it, and they completely renounced, close or ban access to where the money is coming from, put all these rules into a smart contract, and then allowed it to become a community DAO, a project that self-regulates without anybody pausing anything or doing anything to the project. At the end of the day, 6 years down the lane, these people are still a success story. As I'm speaking to you now, you can pick up any of your GPTs or your chat GPT, go there and ask or query about the Olympus DAO mechanism, and look at the successes it has chalked for itself in the last 6 years. So imagine being on a project that allows you to stake and earn fees and commissions from their activities over 6 years, and still very, very profitable to those who are still in it. That definitely, it is something worth emulating. So other protocols decided to study what they did right, and then copy that approach and then implement it into their project. All the protocols that came after them, copying that model and implementing it, also had same successes. Some are 5 years old, others are 4 years old, 2 years old, and then over a year old. The youngest I have seen is over a year old. And that model has proven to be very successful. Hence, the need to actually keep it or adopt it if you genuinely care about your community and you want them to see the long-term, viability of whatever they are doing. And that is why they decided to emulate this or copy this model and implement it in their system. Now, ladies and gentlemen, what I just talked to you about as an economic layer is already somebody's whole ecosystem that has worked for over 6 years and counting without issues, right? Even this concept alone is enough for any community to thrive on if truthfulness and, of course, the urge to scam people, or when the right mechanisms have been put in place to ensure that nobody calls the shot, nobody owns the pool, nobody gets access to anything. Their smart contracts are properly renounced without any proxy or external cause. That makes it easier, and it avoids all the temptations that other projects are faced with. Right? So they have done that successfully, and it is worth emulating. Now, having said this, Shadow's Claw adopted that as their economic layer or their economic model. But then they felt that they should even make it better and add more other sources of revenue to what they have here. So now, looking for other legitimate sources of revenue comes one thing that is making waves when it comes to the crypto space, what we call the prediction market. Now, this prediction market alone is a topic we can discuss a whole day. Guys, the last Tuesday on our morning Zoom call, I shared some very intriguing revelations I did. I was actually reading a report on the prediction market. And out of that finding, I realized that the prediction market just started um, as a very small niche, a very small niche forecasting tool, which grew over the time into a multi-billion-dollar industry. Guys, multi-billion-dollar industry. I will explain and show you proof of that. Now, in recent times, this model has been estimated to have a total global prediction trading volume for last year, for instance, around 50 to 65 billion dollars. That is 2025. So when I saw that, I became very curious. I'm like, okay, on its own, that's a $1 billion industry right there. But why is it now becoming the talk of town? And why is everybody trying to rush to that market and make most out of it? Check it, reality check. All your regular crypto exchanges, all the crypto blogs, all the crypto apps, even your decentralized exchanges or wallets are giving you access to this market. Binance is already implementing or has even implemented what we call the prediction market. OKS and all these big crypto firms have opened the door for people to tap into this market, right? And then I decided to go back up 1 year later to find out, okay, if it was around $65 billion in 2025, so how was it in 2024? I came out to realize that in 2024, total trading volume on the prediction market was around $16 billion. $16 billion, still talking about billions. So from 16 billion in 2024, and in 2025 we are talking about up to 65 billion. That already got me a bit more curious. I went back, I said, okay, maybe that was just one of those, pick up moment. Let me go back a year later and find out how it was. Then I realized that a year later it was just around $4 billion. So what does that seek to suggest? It suggests that that industry is growing rapidly from $4 billion a year to $13 billion, $16 billion in 2024, and then $65 billion in 2025, with experts suggesting that 2026 could rack in up to $164 billion. So that is the industry I am talking to you about. How does it work, and why is it that so much money is going into that space? It's very simple. When you take all the financial instruments, let's say even if you are trading forex is all about you monetizing your opinion, right? Don't get me wrong. Opinion matters most. Although some will tell you it is based on technical analysis and some form of chart, but at the end of the day, basically, all you are doing is that after doing your checks and everything, you are predicting that maybe the dollar is going to perform better than the British pound. So you put your money on the dollar, predicting that it is going to rise against the British pounds. What happens? If your prediction comes through, you make money. If it goes against otherwise or against you, you lose money. Bottom line is you are monetizing your opinion. That is your opinion, right? Now, when you also take even crypto and futures and all those trading, stock markets and all this trading, it's all about you having certain opinion on something and putting your money on it and saying, I hate to use the word gambling, but saying that I feel this is what will happen and I have my money on it. If it goes against me, I lose my money, right? Then when you bring that to the sporting industry too, our sports traders, I don't call them gamblers. When I came to understand this concept, these sports traders, they also make similar predictions. Oh, Ghana is playing against England, and I feel Ghana can beat England. Yeah, that is my opinion. Then I can go ahead and put money on Ghana and say, look, Ghana is definitely going to beat England. If I put money and Ghana beats England, I make more. If England beats Ghana, I made a loss and I move on. All these industry are getting affected by the crypto community when they sat down and look at the volume of money that goes into these people. At the end of the day, when you walk to a bookie to place your bet or to monetize your opinion, at the end of the day, whether your opinion comes through or not, these firms definitely make some cut off your spread, or they make some margins of whatever you stake. Whether you win or you lose, they always made their cut. Same applies to when you're trading forex, right? There are fees. If people don't charge you upfront, they charge you certain fee that when you open one lot, whether you win that lot or not, we are charging you $25 or $50 for just opening that trade. Whether you make money or not, these brokers are making money. So the industry, the crypto industry, sat down and say, you know what, we are very disruptive in nature. Am I communicating, guys? We are very disruptive in nature. Let's bring this industry into the crypto space and then let our people benefit from it rather than driving value from the crypto space and taking it to the external traditional businesses. That was the idea of prediction market. And when it came, it cuts across all the platform. In fact, it is the summation of crypto, forex, stock, politics, everything into one platform to allow people to put their opinion or to monetize their opinions, and at the end of the day, make or lose money. But again, in that manner, the creators of this platform, the leading platforms like the Poly Market and all those guys, they don't care how it goes. Once you go there to monetize your opinion, there is a fee they generate. For instance, as we speak now, there is one poll. I'll show you that on a call in the next few minutes. There's one poll on who do you think will win the World Cup. As we speak now, over $3 billion. Guys, I'm not quoting this off head. Over $3 billion have been thrown on that poll, that opinion. People are voting or monetizing their opinion on countries they believe are going to win the World Cup. What is their motive? They are there to also make some money off the market. But guess what? Poly Market, the owners of this particular pool, even if they charge 2% of the total revenue being thrown on that particular polls, guys, somebody should check 2% of 2 billion or even 3 billion. And that should tell you the amount of revenue they will generate off that particular poll. And there are several hundreds and thousands of polls running concurrently. Some are politics, some are social events, some are general events, to the point that people even monetize their opinion on whether President Trump is going to release a tweet over the weekend or not, whether BTC will rise up to this volume or not. And people are pushing in millions of dollars. So the creators of this platform, they have access to this raw, fresh, untapped revenue that comes from the platform. So Shadows Claw decided that we are going to create one, you know, prediction market platform for us. But why do we intend to do that? Before you can bring out something and compete on the market, there should be areas you want to improve on. And of course, the existing markets like the poly market and the rest, if you like, try it. Some of you, some of us from Africa, for instance, I cannot go on poly market to create a poll. I can't create a poll. That right is reserved for only limited number of people and from certain regions. And these new platforms are saying no. When it comes to crypto, everybody's voice matters. Everybody's ability to create anything matters. So let's rather bring that platform to and make it open to anybody willing to ask anything at all. As long as it makes sense to them, people are definitely going to put money on it. For instance, I am in Ghana. If I see a poll, whom do you think will win the next, Ghanaian election? That is something I can relate to. I know what I'm going through in my country, and I know how people are feeling, and I can go all out there and make predictions. Of course, my opinion is not a generalized thing. Somebody also has his. I may choose party A, somebody may choose party B, party C. At the end of the day, we're all going to that platform to monetize our opinion. Guess who makes the revenue that comes from the total money that goes in? It is the platform owners. So they created what they call the prediction market platform to support or to generate extra revenue and then add it back to the earlier model I talked about, which is the Olympus down mechanism, which is also self sustaining for over 6 years of being in operations. Several millionaires have been raised. I think Leader Focus is on this call. He will give you certain statistics, provable statistics about other platforms that emulated this model and then how it benefited people all these years and is still benefiting people. So their other sources of revenue is definitely through the prediction market. But however, the actual drive is to create an AI agent that would monitor all the happenings in this space. They will analyze all the news, all the social media posts, try to detect people's sentiment and detect early where funds are really moving to. And this AI tool is another, revenue generating tool that will be used to generate revenue to support what we are already earning on the Olympus DAO and to make it more lasting and more sustainable, right? So these three powerful tools have been put together to form what we call Shadows Cloud. Now, at the end of the day, what is the medium through which all this revenue or wealth is generated and shared to us? It is through this economic layer, and there is one internal currency that we use for all this, which is our own internal currency called SAC, the SAC. SAC is currently trading around $27.7. It's been like that since a month now, and I believe it will be so for so many other months to come. And this is what we use to capture value and all. How does that play a central role here? Now, that token, which is the SAC token, is what you earn as a participant when you come in to participate in this model. Let's say, for instance, you have come in to stake, provide liquidity. That liquidity, your 12 hours earnings comes to you in the form of the token. You are free to swap, sell at any point in time without anybody's permission. Whatever reward that has been, put into the smart contract comes to you effortlessly. You go back to the back end and then you swap it at will, or you allow it to compound on its own. It is the same token that powers the AI agent. In other words, people who will be deploying this AI agent to scan the market and make predictions on your behalf and winning predictions on their behalf will require to acquire some of these tokens and burn or use the token as a service, as a medium of paying this bot to go and work for them to generate money. While they trade on this platform, don't forget the platform itself also generates revenue, and that revenue pushes back into uh, uh, um, our economic layer. And then at that point, the treasury takes over the funds to make it available to you. Is this treasury safe? Is the smart contract renounced? Is it safe? Can we trust this? I know these are the kind of questions running through your mind. Don't worry, we'll go into that. So let's look at how the what it really offers you as we speak. Now, I mentioned that our internal token is what we call the SAC. Of course, this SAC is listed on the coin market cap. If you have a very legitimate crypto out there, it should be listed on a coin market cap, and details about the token, trading volume, amount of token in supply, amount of token burn, the team behind, everything, the smart contract address of the token, everything is made available, and you can trade it on your own, which means that you can trade it on any of the decentralized exchanges, including PancakeSwap and all. Now, what does this really offer you? Now, we have what we call two models of staking. In other words, this platform is asking you to be part of those providing this liquidity to the platform by staking your USDT and earning this token, which is the SAC, in return. Right now, we have what we call the flexible, staking model. When it comes to the flexible staking model, your capital is not locked. It's accessible to you any point in time. You can stake it today and the next minute decide that I want it out, and nobody is going to stop you. It is not locked. It's always under your control. Every day it earns you about, sorry, this was an earlier version of the PDF I'm sharing, but it offers you about 2%, about 0.2% daily, 0.2% daily. And at the end of the day, the 0.2 you are earning is not locked, it's available for withdrawal and your capital as well. But if you take the flexible staking, there are no bonus yields, right? Then we also have the fixed staking models, three different contracts available. We have the 90-day staking model that gives you at least 0.4 daily, and then once you stake for 90 days, the system adds up to 10% bonus yield for you. And the 90 days contract yields about 450, averagely 450% APY. Guys, 450% APY. Then we also have the difference between the fixed, whether the 90 days, 180 days, or the 360 days. And then the flexible is the fact that when you take the 90 days, your capital is locked over 90 days. When 90 days is due, it is automatically released to you. However, the 12-hour earnings you receive from the system, the rebates you earn, or the interest you earn, is always available for you to withdraw. Okay, what happens if I decide not to withdraw the interest as they come? That even makes it good, because the system factors that into the next round of rebase calculation, and then it compounds it. So let's say I put in $1,000, or let's say I put in 1,000 SAC, and at the end of the day, after the next 12 hours, I receive about four tokens, or let's say, yes, four tokens. Now that four token is available for my withdrawal, but for the fact that I decided not to withdraw, when the next 12 hours is due and there's time for another rebase, the system now gives me 0.4%, no longer on 1,000 but on 1,004. So you realize that definitely what you're going to get will be slightly bigger than what you started with. And when you continue that for long, the magic of compound effect takes place for you to start seeing these returns. Starting from 0.4, it will get to a point you may even start feeling like you are earning like 5% daily, just because you have decided to allow it to compound. But at the end of the 90 days, your stake is available for withdrawal as well as your profit, and you go ahead, restake, or even walk away with it. Now, same applies to 180 days that yields annually about 885 percent as we speak. As we speak, I'll take you to the back office and show you the existing APY. It's not fixed, it keeps changing. It goes up a little bit, it comes down a little bit. And if you go for the 180 days, you earn an extra 20% boost for the fact that you have decided to go longer. Then we have the best time selling, the all-time selling, people's favorite, I mean the community's favorite, which gives you about 1% daily. it gives you averagely 1% daily, and that is 360 days. This 360 days contract gives you about 1,800, percent in a year, 1,800% in a year, due to compounding effect. Now, it also follows the same pattern. You can withdraw your earnings as they come, or you can choose to allow it to compound. At the end of the day, it's all borders to you. It's your money, it's your call, right? So the fact that you have taken 360 days contract doesn't necessarily mean that you have to wait for 360 days to have access to your money, of course. And this is what Shadow's Claw actually offers you tonight. I just want to touch on the prime areas. And then, secondly, there is one more area I would like to touch on. Give me a second. Sorry, my machine is a bit slow to respond. Sorry. Now, there's another area I would like to touch on, which has to do with what if you contributed towards building this community, right? Apart from the passive earnings that comes from your stake, if you decide to spread word about this community, to invite friends, why is it important? It is important because when it comes to crypto and projects of this magnitude, the numbers play important role. We are talking about prediction market. This prediction market mostly is a game of numbers. Then the more votes that you remember the regular saying, the majority always have their way when it comes to voting that is based on numbers. Of course, in real world prediction, it's always not like that. But of course, there's a way these numbers go into influence what we call the odds or the chances of things happening. So let's say, for instance, Ghana is playing against England again, and then initially the odds of the chances of England beating Ghana was, let's say, 1.2, right? Then the chances of Ghana beating England was also rated as 10, right? Now, if they perceive that the whole world, everybody is going for Ghana will beat England, Ghana will beat England, you realize that gradually these odds, the chances of the event happening, the odds for England keeps rising. In other words, when we amass numbers, the numbers can influence how the odds shift so quickly. And then that can create a very beautiful, arbitrage opportunity for people to even pick trades from the beginning, jump out of the trade before the main event happens. In sports, it happens a lot. They normally tells you, what's the term they use for it? What's the term? Cash out. They tell you to cash out when, let's say, you put 1,000. I believe from the beginning Ghana is going to beat England. Then the odds were, let's say, 10. So they provide you cash out. If you want to cancel the bet and move on with your money, they offer you the same amount you stake. But if along the day the odds for Ghana beating, England drops to, let's say, 8, you realize that your 1,000, now they will be offering you maybe 1,200 to opt out of the event, even as it hasn't happened. So if you are just interested in a profit, you can just say, okay, before the event happens, I quit, right? I cash out and jump out of the event. Why? Because odds have shifted. What caused the shift of that odds is that a lot of people seem to be putting their votes on Ghana to beat, and then for that matter, the likelihood of the event happening is becoming more and more. This AI it manages to use our numbers to influence the market in a certain way, to drive value towards our vote, and then at the end of the day, close the position in time, even before the main event or result happens, to lock in the profit just like expected. So the numbers is an important thing in this market. And if you decide to do that, hooray! The community says, one, there are two ways we reward you for helping build the communities. Two dynamic reward value. One, we have what we call the direct referral rebates. It simply means that those you personally invited, each time our rebase happens every 12 hours, which means that every 12 hours, if it is 0.4% we are earning, it comes in 12 hours. So let's say you invited me earlier, like I demonstrated, and I put in 1,000 sack. Then in 12 hours, I earn 4. That 4, the system is going to automatically reward you with 10% of my earnings. the 4 that came, the extra 4 that came, every time I earn the 4, 10% of that comes to you. Now, begin to look at it from the business aspects of what we do here. And let's say I am compounding. I may be earning 4 today, but in the next few 3 days, I will start earning 8 because I decided to compound. It will get to a point I'll start earning 10, 20, 30, 40, 50 per time, or even 100 per round. And each time I make, you make 10%, cool. The smart contract distributes it nicely to your wallet, into your account. Then you go ahead and engage the internal swap that has been instituted into your USDT, and it's already in your wallet. You don't need to make withdrawal requests to any admin to approve or deny or anything. The rules are simple. When you earn this token, it's as good as you buying it from the market. No restrictions are on it. All you need to do is to follow the lay down procedure and then swap it back into your USDT. Then you have your cash at hand. That is what we call the direct referral earnings. Then we have what we call the contribution rewards. This is for team builders. And the contribution reward, unlike all other projects out there, most of these projects copying this model, they come up with what they call ranking system, VIPs, so-so-so-Ps, V1, V2, V6, and all that. And irrespective of the volume you have in your team, they tell you, well, you have the volume, but you've not made the rank. So until you hit this rank, you cannot make money. That does not exist here. Here is a very simple formula that they use in determining your earnings. And at the end of the day, you are not restricted to how many levels of earnings that could affect you when it comes to the contribution reward. Now, there's a very simple formula which we use here. One, the contribution reward is simple. Your personal sub area performance, or what we call your total team contribution. How is this thing generated? I'll walk you through that. Over the total network contribution times 80% of the network rebase that comes every 12 hours. That comes to you at the end of the 12 hours as your reward. Let me be more practical. Now, we have what we call your legs. Let's say this is you. When you chance on this, you shared your referral link to few friends, and then 4 of your friends decided that, okay, fine, we want to come in. And then these 4, the first guy came in with a team. Let's say he even built 110, W, or 110,000 worth of team volume. Then these other 3 also come up with maybe 100,000 each. I'm just using that as a figure. You realize that this leg will be termed as your major leg. This will be your major leg. Now, the system will add up all the legs, the volumes in your major leg, your minor legs. It will add all up, it will sum everything up. And in most cases, you realize that if you use this one, for example, let's say even if they all produce 10, 10, 10, 10 each, definitely one will be picked to say that is your strong leg. Then the system will now add 10 to 10 to 10, making 30, and then multiply it by 1.33. 1.33, right? So if you check that, you realize that your total volume as a team volume is around 40,000, or it's around 40, right? Now, they have taken out the weaker leg and then giving you 10, 10, 10, 10, making 30 times 1.33. When you check, it's about 39.955 something, becomes the volume based on which you are compensated. Do you know what that means? That simply means that your total contribution is actually being taken into account, when it comes to paying you. And then we determine that, and then we divide it by the total, network contribution, the entire network contribution. We divide it by it, then we multiply it by 80% of the network wide, rebase that comes, and that hits your wallet as your referral. And trust me, this is what makes those guys in other networks waking up to over 100,000 daily, over 20,000 daily, 10,000 daily. All those stories and videos we see about, it is not any unique magic. It is just the power that has been invested into people who build, the opportunity that has been granted, where your actual value is being rewarded in the long run. And that is how this Shadows Claw works. So if you are a builder, congratulations, you have something very legitimate, very, very long term in nature to put up a business on. I keep saying, those of you who have been following me for over decades now, you know my stance on some of these things. If the platform is good and it is long term in nature, I don't mind putting up a structure or business on something. I don't want to waste my time building a team on something that will only last for 6 months or for 3 months, and then at the end of the day they disappoint everybody. Then it is between me and my team. Mostly you see people taking you on. Oh, you are part of the scam. You told me it was good and I jump on it. Hey Jerry, hey that and that, all those things. I mean, we are just tired of it. And thankfully, it is through those moments that we go back to review some of the areas we should not go, and then some of the things we should look out for moving from one project to another. So if somebody invited you to what we call Shadows Club, ladies and gentlemen, this is the opportunity at hand. I would like to go into the security aspect of the smart contract, the liquidity pool, how sure and secure, how safe it is. I would like to go there. But before I do that, I would actually like to come back to the Zoom and then see if there are a few questions for me to handle. And then I'll be so glad to tackle those questions. I hope I've been able to communicate. And oh man, that's a lot of fire emoji right there. Thank you so much, my leaders. Let me come back to the screen and take few questions before we move on. So, Leader Bongi, please, if you are with me in the house, please take over while I take a breather and sip one juice of glass, one glass of juice while I wait to take over again. Thank you so much.
Thank you, Leader Jerry, for that informative session. Good evening, leaders. Good evening, everyone. We welcome you in tonight's session. As you can feel the fire, guys, you can feel the fire. And I can also see Leader Focus has landed. Leader Jerry, can you make him a co-host? I see Leader Focus is on the call already.
Okay, sure.
Yes. All right. Welcome, Leader Focus. I can see my leaders from South Africa. Guys, thank you for joining the
Okay,
call.
I've seen focus.
Yes, I know that there is a lot to take, but from now on, I should think that we are getting the hang of it. Because for me, when I look at this project, when I look at this system of Shadow Claw, as Jerry has already explained, that Olympus DAO opened the doors. It proves that people can make money in this system. However, Shadow Claws walk through that door. Same proven model, but upgraded model. So we've got a better, a bigger and better project, guys. We've got a bigger and better ways to leverage this market. So I would like to bring on Leader Focus to just bring us and greet us on the call tonight. Over to you, Leader Focus. It looks like Leader Focus can't unmute or what? He's a co-host already.
Yes, I've made him a co-host.
Wow, thank you very much. Thank you very much. Good evening once again. My network has been worrying me because I was out of the city for a while, but I was able to listen very attentively all the presentation our leader brought. What I would say is I'm a testimony when it comes to protocols. I've been in one protocol over 1 year now, and I always and I keep on telling everybody that it has been a blessing to me. Shadow Cloud is not just a project. I term it as the come project. I mean, as long as cryptocurrency exists, shadow cloud is also going to be in existence. So, what I would tell every leader over here, whether you are a leader, you are an investor, take your time, go through the project, go through the protocol, whatever we have set before you, whatever the presenters and the leaders have said before you, go through and think about it. And work, if you are a networker, work back to back for 6 months, for 1 year. And what I'll tell you is you will thank God for your own self within a period of 6 months, within a period of 1 year.
Okay.
So this is a project that has come to, I mean, it has come to save us. It has come to bring back our dignity in the crypto space and the online space. Thank you very much, Leader Jerry. Please take over.
Okay, so while we do that, I would like us to do a very simple exercise this evening. On my screen is the almighty coin market cap. I would like us to look up for the internal currency I mentioned, which is the SAC. Um, there you have it as Shadow's Claw here, SAC with a black and red icon. So what is my business here? I first of all want you to know that the coin you are dealing with is a very transparent token that has listed itself or subjected itself to any form of query that you want on a public domains like the coin market cap. And here I have a very special task I want to do. Give me a second. Okay, now on your screens here, what you see here is the contract. This is the value of the token as we speak, currently trading around 27.7 dollars. And of course, you can trade it at any point in time without any restrictions. But I am interested in copying the contract address to this token, and I'll take it to Pool Coin. I want to establish few things. We can use Pool Coin, or we can even use a desk screener. But since I already have Pool Coin on my screens, I would like to use it. Now, what we're going to do now is to look into the liquidity pool of this token, and check how much we have in there first of all. Secondly, now I just pasted the smart contract I copied here, and you can see the name of the token showing right here as Shadow's Claw. So I'm going to click on it, and then here, look to the um, extreme right of your screens. You realize that we have two sets of holdings. One, the USDT, in a certain amount of USDT in the pool, which is about $29 million, guys. $29 million. And then we also have SAC up to $29 million. Why? Because there's a rule in our treasury that states that any SAC token that is minted, $1 should be automatically set aside, for that token. Each time one token is minted, $1 is kept aside automatically for it. So if we have, let's say, 100 billion worth of the liquidity pool, then what it simply means is that we should have in the USD, in the token, then we should have $100 billion in that pool. But here also, you see, we have the holders of this liquidity. My interest is that let's look at who has control over this liquidity. So what I'm going to do is to click on holders. I'm taking it slow so that in your leisure time you can also do same and find out. So now we are on the Binance Smart Chain. What I am looking at is here the holders. Again, look at it. It is the holders I am looking at. Why is it important? It is important because we need to know who has access to who have access to this money that we have, and then the amount of the holdings have been categorized in terms of has been grouped in percentage wise. So now these are four holders of this token or the liquidity. 1, 2, 3, 4 wallets holding it. Let's start from the bottom. We have the Now wallet, which is the public wallet for renunciation, and it shows you that it has zero, holdings. There's nothing in there. There was another wallet address here initially who used to hold it, but it has burned it and it has nothing in it there. But the majority holder is what we call the dead wallet, guys. The dead wallet, you can see when I hover my cursor on it, you see the wallet address as OX00000000 dead. Now this is nobody's wallet. And if genuinely you provide liquidity to a token and you do not want to have access, or you don't want to have access to that money, you don't want to have any form of control over the money backing the token, the project, then the best way is to burn the keys. And how do you burn the keys? You burn the keys by throwing it to the dead wallet to man the affairs of the smart contract, which means that after you have done this, the only way these monies could move in and out is based on interacting with the original smart contract through which this liquidity has been provided, right? And if you look at it, about 98.6%, 98.6% of the total liquidity in this pool has been locked in the dead wallet. Now, what does that signify? Even the owners, if they decide to even shut everything on us, this money, they cannot have access to it. They don't have that control over it. Why is this particular thing important? Let me also use the opportunity to show you something. In some instances, you may not see the Now wallet or the dead wallet address, but you see an actual wallet address, and sometimes it comes with a contract, right? It comes with a contract. So you see this booklet right on the extreme left to this, means that this is locked. And when it is locked, there is a contract. There is a written agreement that, okay, maybe I am locking this liquidity for up to 6 months, and after that unlock it and grant access to me again. So people can actually lock their liquidity pool and show you, oh, look at it, it is locked, it is locked. Then they attach contract to it and say that, oh, you know what, when it comes back after 2 years, or after 2 years of providing, unlock that pool and give the owner of this wallet access to take it. If you look at this, you see that there is no contract attached to it at all, right? The majority holder has no contract attached to it, right? And even in these instances, there are instances where you can even probe further by clicking on this contract. I'm coming. Let me see if I can do that now. Okay. Okay, there are no contracts attached to this. In most cases, there are contracts that when you flip that contract opens, tells you how long this liquidity has been locked up, the exact date it will be released to the owners, and then that is where the danger always lies. So in our case, the entire funds here on the liquidity pool has been thrown to the dead wallet, which means that under no circumstance can the owners of this project go back into this and start tampering with the money in there. It is important because all the other programs that has done similar thing on us is always because they have access to the pool, they have access to the money, then they start making up rules and regulations. Oh, we want to do an upgrade, give us 2 days, we will be back. They come back, and then when you ask them, oh, but you gave us 2 days, they say you are impatient. When it comes to technology and some of these update. If you're a developer, you understand all those jargons just to keep your money. Why? Because they have uncontrolled access over the money, and they always take charge and then cook some of these stories to us. These are hard lessons we have learned in the past. So moving forward to things like this, we have decided not to engage such programs. Secondly, I also want us to do one more thing. Let me quickly go to maybe Solidity Scan. Let's try and look up the smart contract to Shadow's Claw and look at some of the threats that has been found there. So this contract has been built um, on the Binance Smart Chain. So quickly, I'm going to select all the things you see here are different blockchains. Oh, for free education, blockchain is not just one thing. These are list of different chains we have. So Binance chain, the core DAO chain, all this Ethereum chain, and all these are different chains. But in this particular case, we are dealing with the Binance chain. So we choose Binance chain and then also indicate it's a mainnet project. So what we're going to do now is to paste the smart contract we have copied. And for the record, this is the smart contract we saw on CoinMarketCap. Please, let's verify and be sure if I am dealing with the same smart contract. Give me the next 5 minutes, we should be done. It's important we lay out some of these things so that when you are talking about it, you are talking about the same thing. Look at the contract address here, 7cc 7cc and the rest. So I'm going to move on to Solidity Scan real quick, and I will continue with the scan. Give me a second. Someone actually distracted me. Okay, here. So my contract is currently being scanned, and then I want us to see some of the vulnerabilities they have found, and then look at their ratings, and then tell us why they feel those vulnerabilities are things you should be concerned about. We are 7% done into the scan. It should be done in a minute. Trust me on that. It should be done soon, any moment from now. It's still reading. Okay, 10% should go to 80 by now. Okay, let's go. Perfect. So on my screen is the threat analysis, all their findings, and then they have rated this contract with a moderate risk rating with 63 over 100% ratings, and they say they have found four moderate risk elements in the smart contract. My focus will be on those risk elements and then explain why they exist. Now, the first one has to do with the presence of minting function. Now, let me explain. If you are out there to buy a token, let's say this token has been pre-minted. Pre-minting means that the entire token that will ever exist has been pre-produced, right, and listed on the market. Then you pick up the smart contract to scan, and you see that, oh, there's the presence of minting function. It means that when those people bring those circulation in the near future, they can come back and then mint more token or produce more token, or their smart contract has the ability to produce more tokens. And for that matter, this becomes a problem. But in our case, the SAC that comes into being is as a result of the rewards that are distributed to people on 12 hours basis. In other words, this token is not pre-minted. It comes as a reward to those of us who have provided our USDT for staking, or for those of us who have built teams. So the presence of this minting function is not necessarily a problem to the smart contract, because that is what it has been designed to do. Please let me take that again. If you are buying any token on the market and they say the token has been minted already, but you check the contract and you see that it contains this minting feature, then you have a cause to be worried. But if you have a token like this, or all the Olympus down protocols, the tokens are not pre-existing. They have not printed them out. They only come into being after every 12 hours as a result of our staking activities. So this feature is a positive feature, but of course, this is a general thing that they do, and they have to warn you on that. Then, secondly, they also talk about a burn feature. Of course, our smart contracts allows, or the smart contract allows a buyback and burn feature to be able to modulate or to control the total number of tokens in circulation in order to maintain a healthy price mechanism. In other words, when the token price is dipping, and this is where a lot of people don't understand, when you read their smart contract very well into detail, you realize that when the token price is dipping at the end of the 12 hours, instead of the smart contract producing new tokens into the market, it will rather go to the treasury, take money from the treasury, come to the market, buy the token from the market because it is cheaper, and burn it. By so doing, in the long run, it maintains the healthy, price thing. Let it not be that today you want to come and start staking and you are acquiring the SAC token at $27. Then after 1 year, after the system has given you, let's say, 23x, because realistically, if you put $100 for the next 1 year, you expect to make about $2,300. Oh yes, and when you put 10,000, it means that at least, or when you put 1,000, it means that at the end of 1 year, you are expecting to make about 23,000. Let it not be that when your 23,000 is up for you to swap, you swap it and get dust. So there's important feature that should ensure that the token is not too much in supply, and then part of the fees that are generated from all these activities is used to buy the token back and burn in order to cause the price to remain stable for you to achieve what you want to achieve. So two, the second feature, which should have been a problem, actually is also not a problem. It's actually a solution to our problem. The third one, which is the Solidity's Pragma version, is a general thing. You have to make your smart contract compilable or make it easier for others. You have to list your token on your smart contract on GitHub. If you want people to look into your smart contract and see if genuinely what you have is real, whether what you claim is real, you have to make it open for others to also compile it and then look out for the threats involved. So for that matter, the third one is not an issue. But now this is one very feature that is very important to me as a person, right? For the fact that this is not an upgradable proxy contract. Guys, we are falling prey to smart contracts that were properly renounced, right, with the keys thrown away, but with small window left for proxy updates. Let's say if they saw a bug, or if they want to improve on certain areas of the smart contract, there's a small window that is always left for them to upgrade those areas. We have realized that as long as humans are involved and it is money we are talking about, people cannot be trusted to use that window for what it is created for. Recently, one project did it to us using the proxy contract. They used that to rather lock up their community activities and now holding us at ransom, so that if you don't do this, you don't get this. If you don't do that, you don't get this. Since then, we have decided that any contract that contains any amount of proxy is a no-go area for Jerry and his teams. So personally, out of experience, I will not jump on any project, no matter how good it is, with a proxy upgradability, because once they have that window, they will always use it to their advantage. And then you can go on and look out for all the things you have said. Finally, before I touch in the next 5 minutes, I want us to also go to the headquarters of smart contract security and audit, what we call CERTIC, right? I want us to go to CERTIC, and then let's find out if genuinely all these things Jerry is bragging about, if genuinely First of all, if your brand is not, if you are in a crypto space and your brand is not on Certic, I keep saying maybe you haven't really started your journey yet, because this is the biggest blockchain security auditor. All the favorite brands
Good evening, guys. I think Leader Jerry maybe is encountering an issue with his network connection. Let's just give him a few seconds to can come back and continue where he left off. But while we are waiting for that, I just want to check quickly if we have like any questions on our, but I'm sure Jerry will be coming back to actually attend on some of the questions, because I'm checking also Leader Focus if he's on the call. I see he's not on the call as well. So I can see here we've got leaders on the call. If you've got any other comment, or Leader Anton. Leader Anton, can you unmute yourself?
Good evening. Can you hear me?
Yes, I can hear you, Leader Anton.
Yeah, sorry. Yeah. It's good to have you guys here. My name is Anton from Kenya, and I'm very happy.
Oh, we also lost Leader Anton. I don't know what's happening on that side of Africa, where maybe there is a challenge of the network as well. But Leader Anton, you got muted again. I don't know whether you muted yourself by mistake or what. Can you unmute your mic, my leader? Leader Focus, are you there?
Oh, well, thank you very much. I've been struggling. I wanted to unmute, and then they are saying the host, unless the host allow you. So good evening once again. I mean, Leader Jerry, I think he's encountering network issue. He wanted to do something that is very, very important. We go to static. I can see somebody brought a screenshot or something of that sort. We go to static. The Jerry was taking us to static, and then from there we check what static is saying. That's the largest and biggest blockchain security audit firm. What static is saying about Shadow Cloud, the Yahoo, and okay, the Jerry is back.
Oh, wow. I didn't know. Oh my goodness. I didn't know I've been off. I have been on my screens doing presentation, going to Celtic and doing that. Leader Focus, please tell me where you lost me so I can quickly catch up.
We lost you, Leader Jerry, when you were just opening the setting.
Okay. I'm really sorry about that. Let me come back to Celtic. Oh my God. All I have said, it is well. I'm really sorry, my guys. Really sorry. So, I am back. Can you confirm if you can still see my screen?
Yes, your screen is visible.
Okay, so I talked about, let me go back to, oh my goodness, I can't believe this. It is well. So I talked about the project. Let me search for it again. Okay, Shadow's Claw here in my search history. Now, this is an A-rated project, like I talked about earlier, and this project, as you can see, here is the smart contract we dealt with earlier, the same OX7CC. The ecosystem is still Binance Smart Chain. The sectors we are looking at, or the sectors they have placed this, is AI and AI agents. The same thing we talked about earlier, and the rest. Now, I said so many things about the contract being verified, and then the bug hunting bounty program, which I said in my absence while talking to myself, that the developers of this program have submitted the project to the entire developer community, setting aside $10,000 here, $10,000, that whoever finds any abnormally in their code, any bug in their code, would be rewarded with the 10,000. This is not an empty promise. This is money that has been reserved with CETIC, and then the community has been thrown to the CETIC experts and builders to pinpoint any bug at all contained in this whole smart contract, any vulnerability at all, and then get rewarded for $10,000. This has been on since 26th of May till now, and nobody has been able to come out to pinpoint to anything about the smart contract. And like I said, today I really don't want to go so much into the details. But even if you look at their active user base, you realize that, hey, sometimes we lie to ourselves that, oh, this thing is only popular in Africa. Look at it. You feel we are just popular until you look at all these matrices and realize that we are global. Guys, we are global. We restricted our team to Africa as a community. But look at it, bigger, where it's even more deeper, is what far away in Europe, where a lot of users, and of course in China, where a lot of users are saying yes to the project and all. So the project we are talking to you about this evening is a project of high caliber. It's a project that has submitted itself to scrutiny from the community. They are open to working with everybody, and every single aspect, all the smart contracts, where our treasury is, where our liquidity pool is, where money goes, where money comes from, everything has been listed and thrown at our community. You saw me post that today. So we have thoroughly looked at the project from all angles, and all I can tell you is that if other similar models with only one economic model, which is the Olympus Down layer, has been able to sustain themselves for 6 years, then you have somebody copying that successful, architecture, and then adding external sources of raising money and then using it to support their operation. If they can do 6 years, these people should do 20 years without sweat. That is my personal opinion right there. I don't know what you're going to do with it, but I will be guided with it as well. So it is a project of, like my leader said, he said, "To thy kingdom come." Why did he say so? One of these sister projects that copied this platform, and a Kenyan friend who brought it to Africa, may his soul rest in peace, has passed on. 4 years down the lane, he wakes up every morning to at least $10,000 to $20,000 in his wallet. Somebody say generational wealth. He has left something that will even make it hard for his family to forget about him. Each morning they look into that wallet, it is another means to remember the work he has come to do for his family. And that is how unique and long-term in nature these projects are. So we may be wrong in the past, guys. I believe now that these things are becoming, they are finding ways a lot of projects will build on it, tighten it, and make it more lasting. And the beautiful part of blockchain is that once you achieve a success story, your milestone is somebody's challenge to also make it better and better and better and better. And that is how Shadow's Claw has been born to us. So on that note, thank you so much for having me around. I think I've said a lot from my end. It's time to come back to you in the studios and then take your questions and answers as well. Thank you so much. Leader Focus, please take over from me.
Thank you. Thank you very much, Leader Jerry. I was going through the chat now. I see we've got some few questions on the chat. The first question comes from Chidi, okay? He asked, how do I see my profit and my investment? So Ruby, I saw she has answered under risk stake. And then we also have another question, which is asking, let me see, is this a question? Okay, yes, it's a question. Thank you for the presentation. Assuming you stake for 6 months and your duration is not up and you need funds, can you access all your returns assuming you had already made 5 months?
Beautiful question. Now, the beautiful answer is that you don't even need to wait for 6 months, guys. When you stake today or when you stake now, the next epoch, which is the next release base in 12 hours, your returns start dropping in your account. And that returns is automatically available for you to access any point in time. So if you decide not to touch it and allow it to compound over time, when the time comes for you and you need it, you go for it and you get it. That's the beauty, another very beautiful aspect of this whole architecture. So 6 months is even long enough. 24 hours, 12 hours is ready for you to start accessing it. And that's just one more beauty of what we have here.
Thank you. Thank you for that